Lejda Bargjo and Iman Honarvar from Robeco, they will make a speech today here on the FinPro about nextgen Quant. I can imagine it have anything or something to do with AI and ML, artificial intelligence, machine learning in the investment process. I hope I'm right. And I'm very happy to learn a little bit more what happens here and what we have to see. And let's start with a definition. What is behind nextgen Quant? What is the idea behind this concept?
For decades, investors have been using certain philosophies to extract alpha from the stock market or the bond market. For example, they have been looking at value, finding the stocks that have the same characteristics but cheaper valuations, or finding companies with good quality, which means good balance sheet, good income stream, and so on. With nextgen, we are in fact using the new technology to implement the same philosophies, the same ideology behind investment, but with new data sets, with new algorithms, and with the new computing power that we have.
It's been a lot going on in the last years. We've seen an increased amount of data, the way data is used on a day-to-day basis, ourselves alone, like how much data we produce and how much we consume on a day-to-day basis. We've seen a large increase when it comes to the computing power. So we can do a lot more with the data, a lot of analytics, like you were somewhere and then you get already a recommendation of what you might want. And then last but not least, Iman mentioned on the previous question, the rise of new algorithms. I mean, you as well in your question is basically AI in general. We see deep learning, NLP, ML, and so on and so forth. So these are the new trends, and this actually have given the rise to that all.
So a very important question is, how can we imagine the investment process using nextgen Quant?
In fact, nextgen Quant is not a destination that we want to reach. It's the process of continuously using these new algorithms. As they evolve, nextgen investing will also evolve. Something that we call nextgen today, probably 5 years from now, is not nextgen anymore. So far in the process that we have, nextgen signals and the techniques that is made by machine cannot replace humans. So that's why we are always saying that is machine plus man plus machine, rather than man versus machine. In fact, nextgen algorithms are just assisting humans on making better decisions, given the vast data sets, like Lejda mentioned, and also the new techniques that we have to find new alpha sources. So at the current stage, they are great assistants of humans for investing.
So you know that all the industry thinks and fears that AI could be a sort of risk for their own jobs. Can you confirm that, or can you help them?
How long have you been talking about it? Like every new development that comes in, everyone say, well, that's it, that's the end. That's the end of that, and that's the end of something else. So in a way, I don't agree with that, because it has always been an evolution, and it won't stop now, and I don't think it will stop in the future either. So our role has changed. So even if you think of our models, let's say 30 years ago, if you ask the portfolio managers back then, they used to use probably Excel, and that was, wow, writing code in Excel. When I started, was different the way I program. And if you'd ask a young researcher today that just starts, then Iman can confirm he programs completely differently from the way I used to code things. So in a way, it's been an evolution, and I think we will be needed, but it will be needed more as orchestrators, right? To analyze more, to make economical sense. So the role will change, and I think we need to be open towards that. It's not going to be, I don't see an end for humans, especially in Europe, also under the regulations that we do have in place.
Very nicely said. Maybe one thing to add, very nicely said. In fact, that's the question that we ask ourselves every 20 years. Like when automations come, we are asking, are we going to lose the factory jobs? When internet comes, when new technologies come, we are always asking ourselves this question. But usually when the new technology comes, humans start to doing more meaningful jobs. And of course, some of their jobs will be delegated to machine. I think now with AI, humans are going to be not the creator of the content, but the validator of content. Very often, the machine will recommend a buy trade or a sell trade, and of course, humans should be in the loop to validate this. Does it make economic sense or not?
You know, if you use next-gen quant technology, what is the impact? Can you measure that? Is there any experience on that?
Well, you have to, right? So it's everything you have to. So we can, as quants, we can actually attribute every single signal we do develop, how much it brings in basis points to the model. So it is quite clear, quite a glass box in which you can look in there and say, well, this is how this signal brought this and that much, and this signal brought this and that much. It's been, as I said, an evolution. So in a way, we started already when it comes to investment with the Fama French model, and so it developed with the time. So a next-gen signal is a signal that contributes to the alpha or the reduction of risk, and that you can definitely see, especially with quant models.
Exactly. Since these traditional way of quant investing and next-gen way of quant investing, they are so intertwined, it is hard to give a fraction of how many percent is one and how many percent is the other one. But my feeling is that an increasing fraction of the alpha of the portfolio can gradually be attributed to the next generation of techniques. And like I said, next-gen is also evolving itself. So something that we call next gen today, maybe 5 years, 10 years from now is not next gen anymore. So it is really hard to say how many percent, but it is definitely an increasing fraction of the performance.
What can you provide institutional investors to be a part of this next gen quant technology?
Well, we've got our products in place. So we've got our funds that have that are the best solution in place. So basically tackling based on your needs, tackling different factors and different signals, including next-gen signals. And of course, we also got, wherever possible, to integrate the next-gen signals. We do integrate them within the current models that are running for 20 plus live in the strategies. So 2004 was our first strategy launched in that. And as of end of last year, we also launched our ETFs on that and our dynamic theme machine, which is ETF, which is basically an ETF that combines or that makes use of NLP, which is more a new algorithm, new way of deriving information from text-based analytics. And on the other side, you also still do not go against proven factors and proven signals from the history. So this could be your way. So basically, you could invest in the DTM, so dynamic theme machine, short for that, which is an ETF. You can go and they are listed in etc. Then you can just go and invest in one of the more traditional portfolios that have a lower tracking error that use the traditional factors too, but also the next-gen signals integrated in there.
So I think it sounds very good and very interesting, and I wish you all the best with your work and your speech today. Thank you for your time.
Thank you.
Thank you very much.